Ok, está. Hello, hello. ¿Cómo estás, Anita? Buenas tardes. How are you, everybody?
Hola Iris, ¿cómo estás? Feliz lunes.
Feliz lunes, Ana. Estamos aquí bueno, en English. Hello, everybody. We're here in After Hours Real Estate. And today we have this awesome topic. Now, why did we choose this topic? Because this is a question that a lot of our clients are currently asking. How can I be smart enough, right, to utilize the income tax refund that I'm about to get, okay, in order to buy a house? So they're being savvy, right, which is or proactive, which is great. So
Yes,
today we're going to be talking about 5 or more ways. We're going to give you all the golden nuggets with all of our experience, how to utilize this tax refund in order for you to buy a house. So we have 5 ways, and Anna is going to be adding more ways that we can use this money. Okay, instead of just spending it on, I don't know, whatever. No, we can spend it on anything.
it's
So
nice, right,
it's
to spend
nice.
it, but first the house, first the house.
Where's the house? So we have Ana Cabrales with Cabrales Mortgage, and I am Iris Heredia with Momentum Realty. So all real estate related. We are live. Ask us any questions. You can send us any message. We're here. So Anita, in your experience, which will be the ways that we can basically educate or give tips to our buyers how to use this money they're about to receive, the tax refund money?
So one of the great ways to use the money is to save it for a down payment on a new home. It's customary. A lot of our customers don't have money or haven't thought of buying a house, and one of the reasons why is because they say, "I don't have money for the down payment." Well,
Yes.
guess what? If you get a refund on your income tax, then it's the perfect time to launch you to have that saving so you can have a down payment. Um,
Yes.
get an estimate, find out how much money you need, figure out how much money you're gonna get back, and then we can figure out how much, if we're short, how much, if there are any seller credits maybe that can help you, maybe down payment assistance, anything else that we can maybe help you with so that you can have all the money that you need so you can buy a house this year.
Yes, because that's something, I mean, and that is true. I mean, we've had a lot of clients that are ready, right? But all of a sudden, once we start talking about the escrow money, which is the first step, right? On, let's say your contract got accepted, now you need to have some escrow money, right? And it is usually 1% of the value of the home. So if the home is $200,000, you're gonna need at least 2,000. Now that amount is negotiable, okay? But you still need to have this money to the name of the house, a title company. Okay, and that is one of the costs for closing costs, right? But Anna right now is talking about down payment. Okay, that is the first down payment that you need. Now, there's another point here very important, Anna. Let's talk to our friends and refresh their minds. Usually they ask me, do I need 20% down payment? No, you do not need 20% down payment. Okay, that's a myth. Now, it does apply to some loans. Okay, but that will be for like an investment property when you already have your house. But Anna, what is usually the down payment for a first time buyer?
So an FHA is 3.5% of the purchase price. So let's say a house of 200,000 would be $7,000. That's FHA.
Okay.
Conventional, it's 5% of the purchase price. And of course, veterans don't need a down payment.
Exactly.
USDA don't need a down payment.
So then don't worry, stop listening to your aunts and your friends. It's not 20% friends, okay? So 3.5% FHA, 5% conventional, and VA will be no down payment, okay? Usually
Usually.
all of us, right? Well, if it is your first time and you're not a VA, what are you gonna use? An FHA loan. So we're talking about a 3.5% down payment. Okay, that is just a little bit cherry on the top. We're not talking about down payments, but okay, so we're talking how to use your tax refund money, okay, in order to buy a house. Be savvy this year. Okay, so one of them is use it for down payment. Okay, so we already talked
Mhm.
about that. Number two will be, Anita.
The other one is, let's say you can use it to pay down debt. So let's say that you already applied for a mortgage and they told you you qualify for 150,000 and you're like, I'm not gonna find anything for 150. But
Mm.
the down, whatever you get as a refund, it's enough money to maybe pay an RV that you have or a debt that you have. And now by paying that debt, now instead of qualifying for 150, maybe now you qualify for 200 because you got rid of debt. So that's
Yes.
another way to use a refund, pay off debt, maybe pay off of, accounts that have high interest rate that you're just spending a lot of money on interest. Maybe use it to do that. And then at the same time, it's going to help you with what we call the debt to income that we've spoken about before. So you can qualify for a higher amount.
Okay, so then pay debts. Okay, if you have any of one of those revolving credits that we love to have, that will be one of the things to get rid of. Okay, that way you can qualify for more money and get, I mean, ideally a bigger house, right? I mean, to qualify for more money.
More much.
Another thing, Anita, I mean, will be closing costs, right? I mean, number three, I will say closing costs. Now, a lot of people get confused with closing costs. And one thing that they always ask me is, who is paying for the closing costs? He said, is it the seller or is it me? So, Anita, what do you have to say about that?
I would say the majority of the time the buyer pays for their own closing costs. The seller will pay for the seller's closing costs, which are typically like attorney fees, documentation fees.
Mhm.
But the closing costs are basically the fees that all these companies are charging so that we can do your loan.
Okay.
Appraisal, survey, the court recording fees, the title company fees, check if it's in a flood area, taxes, insurance, all those are closing cost fees. So because they're associated with your loan, then the buyer usually pays them. One,
Correct.
sometimes you find a seller that will help you. They want to sell, they're eager to sell, so they'll say, okay, I'll pay half of your closing costs. I'll help you with $2,000, $3,000, whatever. So then they'll help you, but you'll still need some money for closing costs. So if you get a refund, it's a great thing to use the money for your closing costs.
Okay, closing costs, friends, this is what we're talking about. The escrow that I just mentioned right now is 1% of the, once the buyer and the seller agree on the price, now we have a contract. This contract has to be legally, escrowed, which goes into the title company, and you need 1% of the value of that property to make it enforceable, right? Or legal. Okay, let's say, for example. That way it gives you the right to do inspections, okay, which is the first step. So then one of those things will be escrow. Another thing will be inspections. After it got accepted, you have to do home inspection, thermal inspection. Obviously, these are choices, but we always recommend for you to do it, okay? Because you want to know what you're buying. It's one of the biggest investments of your, of your money, right? It's a big investment. So I will advise to do it. Now, it's not required, but we will advise you to do it, right? Okay, so that will be inspections, and then we have appraisal fees, which is does the property have the value required, right, on contract to lend you that money? So is the property worth $200,000? So those things will be your closing costs, and yes, you will pay your closing costs, and seller will pay other closing costs. So basically, it's kind of like a half and half.
Yeah.
What goes to you, you pay, which is you're the buyer, and seller will pay the other part. Okay, but you do have to have some money, okay, in order to begin the process on buying. Okay, so that will be number three. So number four, Anita, what would you
we'll,
say?
we'll say buy down points, for example. I don't know if people have heard of that, but let's say that you're shopping for a mortgage and you get a 6.5 interest rate, let's say. When you buy points, the interest rate it's lower. So let's say you have some money left over and you
Mhm.
say, what, I really don't want a 6.5. I wanted a 6%. Okay, guess what? If you spend $2,000, you can get a 6%. Hey, guess what? If you spend $3,000, you get a 5.5, whatever, right? I'm just making numbers up. But that's called buying points. You're buying your interest rate. You're paying an extra fee so that your interest rate is lower. So that's another way to use your money. If you have extra money and you're like, I want to put it towards the house, well, guess that use it to buy down your interest rate. You're going to pay a lot less interest over the 30 years or the time that you have your home.
Yes, you're saving money in the long run. Okay, so that's what it is. Okay, now, uh, we're not gonna force you to do that, right? You do not have to. That is optional. I mean, because you can say, well, I'd rather use my money to do something else with it. But I mean, if you are thinking in the long run, I mean, that will make sense, right? To buy down. It's called buy down points.
Uh-huh.
Okay.
Yes,
Okay, so that will be number four, okay, buy down. Now,
Number
number,
five can be reserves, for example. Let's say I have a file that it's a maybe the credit score is not perfect. It's an iffy file. And sometimes I run it through the system and I don't get approval. But then when I put that the customer has leftover money, they have reserves, money after closing in their bank that they
Mhm.
don't have to spend, they just need to have in their bank, I get approval. Why? Because the system says this person has enough for closing, they have enough for down payment. And at the end of the day, after closing, they still have money left over. This is a good client, so we get approval. So
Correct.
the more money, of course, you have, the stronger your file is. So it can help you maybe before you didn't qualify by having this extra money in the bank reserves. Maybe we'll get an approval this time.
Exactly. Now, when Anna's talking, maybe this person has money. Okay, this is not that you are wealthy, right? Generational wealthy. What she's talking about is maybe some extra money, extra cash, right? You might have there in your account, right? And that you didn't basically left your bank account in zeros after buying the home. Now, you can also say, hey, I had some savings, right, into whatever account. So
Mhm.
what I want to do is maybe transfer them to whatever account that you're looking at. That way people will know. I mean, the lender will know that you have enough liquidity, no? Enough money. So then you will qualify now. But when we are talking about reserves, this is what, I mean, let's say, for example, one thing will be to get qualified. Another thing will be, let's say, emergency fund, right? I mean, we already are owners of the house. We're having so much fun. Everything is great. Now, you also need to know what if, God willing, you get sick and you cannot go to work, right? So it's always recommended for you to have at least one, two, maybe three, okay, monthly payments, mortgage monthly payments saving to your account. That way you're able to pay for that, while you go back to work, right? So that will be another way to see it, reserve slash emergency fund.
Yes.
Um, Another point, Anita, that you have that, that it will be like something good for our friends
I would say
about.
maybe now you don't buy that perfect house. Let's say that you've been looking for a while, haven't found what you want, but yeah, you found a house that has potential. You like the location, you like the square footage, you like the area. But maybe needs to replace the flooring, for example, or pay the kitchen cabinets because you don't like it. Well, guess what? Now you have extra money that you don't have to buy that perfect house, but you have money to renovate the house and make it your own, paint it, change granite, I don't know, something, because everything else the house has, and it's just missing that little touch that you're going to give it. So maybe now you'll open your opportunity to finding a house that fits your needs better.
Exactly. So we're talking about house updates, remodeling, painting. For example, you may use your tax refund money to paint the house. Maybe the house was, I don't know, beige or yellowish, and you don't want the yellowish tone anymore. Now you want something more grayish or, white. So you can use the you don't have to use it on any of the other items that we mentioned, right? You can say, hey, I'm going to save this money, right? Because I'm going to paint my house. I'm going to paint the cabinet. I'm gonna get rid of the carpets, whatever it is. We're talking about minor items that will make you feel more comfortable in this home that might not be your dream home, but it might be your starter home, but you still wanna feel comfortable in this home for 3 to 5 years until you will upgrade to the following house. So that's what we're talking about, house updates, remodeling, using that money for the tax refund money.
Correct.
Anita, what about using this money for insurance and taxes?
Yeah, I mean, they're gonna most of the time they're gonna be included in the payment.
Mhm.
But I guess I guess it's gonna be part of the payment, so they could always just use it like for the reserves or having that extra emergency fund.
Because what Anna is talking about is your monthly payment already includes, is already including whatever it is. You're paying 1,500, I don't know, $2,000 a month. Okay. The insurance and the taxes are they're already included in that payment.
Most
So
of the time, I would say that.
most of the time, sometimes people choose, because I know my clients, some of my clients will choose and will say, I want you to remove taxes and insurance from my monthly payment, right?
When they give 20%, then they have that option. They can choose.
Which
But
is
if
a correction.
anything less than 20 will be included.
Okay, so then will that be a conventional loan? No, no, it's just giving 20% down of the value of the property.
Yeah, conventional.
So then that's another great tip. So then if you are able to give 20% down payment, okay, you can remove the insurance and the taxes from the property, and then you can save the money up and pay it at the end of the year.
Correct.
Okay, and then you can use your tax refund money, right, to pay that down payment and escrow, until the end of the year. So then you can continue using this money for anything you want. Let's say remodeling, whatever, buying furniture. Uh, there's also a moving cost, right? You're gonna move into the house. You might be required deposits of light, deposits of water, which is the services, right? And also the moving, tracking company and boxes, etc. So
Yeah.
then those are like little extras, right? That you should have or think about. But mainly, if you use your tax refund money for any of these tips that we're giving you today, you're gonna be good to go to buy a house this year. Okay, and yet you do not need 20%. Okay, whatever money you get now, how much money? Let's say, well, it all depends how much you make. But let's say you get $3,000 to $5,000. Let's say, for example, on your tax refund. Okay, so that is a good. I mean, in your experience, Anna, will that be a good amount that will help in buying a house?
So $5,000 could help with the closing costs, basically. So yeah.
Okay, so then don't be thinking that you need $25,000 as a tax refund or 20,000. So we're talking about, obviously, if you get more, better, right? But if you don't, let's say you get 5, 7, 3 to 5,000, you can still use that money for all of these things that we were mentioning right now,
And
right?
let's say that it's not enough. Let's say that you're like, it's not going to be enough. Well, put it in a CD, put it in a CD in a bank for a year, leave it there, let it earn interest. And maybe by next year, you put next year and this year together, and now you have enough. So make a plan. Don't just spend it on clothing and purses and stuff that are not going to leave you. I mean, it's nice, but it's not going to leave you a house. A house, it has, it's yours. You can do whatever you want with it. So build wealth for you and your family. Use your refund wisely, I guess.
For next year. Yeah, that's a good point because yes, we may have some friends that will say, "Well, I just got $2,000, right? And I don't think that's gonna help me much." But that's a good point. Instead of using it, right, buying clothes or whatever, things that we like to buy. Uh, but if your goal in reality is to be a homeowner and stop renting, then those $2,000, plus another tax refund that you get or your savings from now to the following year, then you will have 7,000, $5,000 to $7,000. That will be more than enough, okay, to begin the home purchasing process. Okay,
So
so
put it in a CD because the CD usually is like for a year or 2 years until you're not supposed to touch it. And besides, if you don't touch it, a certificate of deposit, they usually give you a higher interest rate also than just like a checking or a savings.
okay,
So
so
put it put it in a CD, a certificate of deposit, and you're not gonna touch it for a year or 2 years, and it's gonna grow. The bank is gonna give you money because they're using that money for whatever the bank needs. So that's another way. You're not gonna touch it. It's gonna be there, earning interest, and then whenever you're ready, you can pull it out.
yes, you don't have some specific times. I mean, they will let you pull it out maybe,
Mhm.
right?
Yeah, it depends on the CD. You can get a 60 month, 9 month, 12 month, 18. If you take it before whatever time you decided, usually there's a penalty. So that's why you're not supposed to touch it.
Okay.
But
Okay.
maybe you get a 9 month or a 12 month, enough to get you to the next year when you get the another refund, for example, or a salary increase or a bonus or whatever your plans are, your goals are.
Perfect. Okay, friends. So thank you so much for being with us today. We're live here. I'm just gonna go over the tips. It's just 6 of them. They're easy. So one of them will be your down payment, which is not 20,000 or 20%. Okay, it's 3.5. The number two will be paid any debts. That way you can qualify for more money.
Yeah.
And then number three, closing costs. Use it for your closing costs. Number four, buy down interest or points, buy down
Yeah.
points. You can get a lower interest rate.
Mhm.
Number 5, what was number 5? Reserves, okay? Save it for anything, right? Anything that it is that you need. And then we just gave you an extra one, which was house updates, right? So let's say remodeling, painting, you might not found, probably, I mean, if it is your starter home, don't be thinking this is your dream home, okay? So then you're gonna need some remodeling. You can use it for that. And then the last point, we added 2 more golden nuggets is put it into a certificate of deposit, which is a CD. That way you're not ready this year, you will be ready the following year. Okay.
Correct.
So if you have any questions, friends, you know how to find us. Okay, send us a direct message in any of the social media platforms that we have. Ana Cabrales with Cabrales Mortgage, Iris Heredia with Homes by Iris and Momentum Realty. We love to help you. We want to see you succeed. So I know if it is not this year, you're going to be a homeowner very soon. So let us know if you have any questions. And thank you for being here with us. And we'll see you next Monday.
Thank you.
Thank you, Anita. Bye. Thank you.
Thank you. Have a good one.